Hello everyone, thanks for joining us today and welcome to this educational presentation of how to trade the current roller coaster market. Now I'm sure you're all aware of what the market's been doing the past couple of weeks. It's actually been acting quite wild, going straight down, then straight back up and straight back down again. For instance, if we look at what the market was doing just a month ago, we see that we were breaking new highs. As we can see here, the Dow was crossing over 26,000. And many people were elated thinking that it just won't never go down again. For example, MarketWatch reported that the Dow closed above the 26,000 level for the very first time ever. It continued to skyrocket on Wednesday as the industrial average surged more than 300 points. It's the first time it crossed that mark in its 121-year history. So this was fine in December and January, but then all of a sudden, this is what usually happens. As you see the Dow going straight up and straight up, you start to see a little bit of counter movement, okay? But this is fine because this is expected. People want to take profits. It's still the beginning of the year. We were just coming into February, but then the Dow is in free fall. Los Angeles Times reports the Dow plunges more than 1,100 points, okay? So as you can see, we were starting to go down, but then it really kicked into overdrive and we started to really get worried. Why? Well, because all the gains established from December onto January, what took 2 months to gain, was lost in just about a week's time or so. That's usually the way it happens in a strong downward move. So at this point, most investors are thinking, well, we're obviously in a bull market now, right? So you've got to sell everything, and most investors were selling on that day. But look what happens right after that. On the 6th, the Dow rebounds to close up more than 560 points in wild market trading, okay? So as we can see, we bounce right back up. So maybe everything is okay. Maybe we hit a bottom. Maybe this was major support right here. And so we're starting to go up. So all the positions you sold or the options or whatever you trade, maybe it's time to get back in. So you jump back into the water and you say, I'll buy back at some cheap prices. I'll try to recoup my losses. And then guess what happens? 2 days later, the Dow plummets more than 1,000 points, closing below 24,000. So now you're convinced we are in a bear market. We're making lower lows. We tried to have a bounce. It didn't hold. And now we've closed at the lowest point ever. So this is extremely scary. You're liquidating everything in your account. But 2 days later, what happens? This past February, Wall Street endures another chaotic day, but closes up 300 points. And so what looked like the beginning of a major free fall, all of a sudden we started to bounce back up again, and we've continued higher coming into this week. So we've been really trading at roller coaster for the last couple of weeks, but today I'm going to be sharing with you 2 simple steps so that you can be able to formulate these into a trading plan, and I'm going to show you how these 2 simple steps actually form one of our most consistent strategies to help you trade the current roller coaster market. So this promises to be a great presentation and educational webinar. Thanks for joining us today. My name is Steven Primo. If you're new to my presentations, I'm the president and founder of Specialist Trading, and we are first and foremost an educational company. We're a little bit different from other webinars in that we're not trying to promote the perfect strategy that generates thousands and thousands of percentage points a year. We're not trying to tell you what market to trade or what the perfect time frame is. We don't believe in that. All we're trying to do is provide all of our students and members around the world in over 116 countries and in virtually every state in the United States sound fundamental education that has stood the test of time. These are things that I've accumulated in my 41-year career of trading. I started trading on the floor of the stock exchange in late 1977. I was on the floor for a total of 16 years. 9 of those years I was a specialist, meaning I made markets. If you wanted to buy or sell a particular equity, a particular stock, you had to go to the trader who specialized or who made markets in those things. I made markets in IBM, Waste Management, US Air. I traded during the crash of 1987 and the bull market that followed. And about 80 years ago, I teamed up with Pro Trader Strategies, where all we do is educate all of our students around the world and in the United States the things that I have accumulated that have shown signs of consistency, okay? Not some fly-by-night system that lasts perfectly 1 year and then gives everything away the next, but things that have stood the test of time, because that's the only thing that will sustain you. When I was struggling some 41 years ago, when I first started trading on the floor, my mentors showed and taught me the exact same things that I teach my students around the world. So if these things have been able to sustain me for 41 years, for over 4 decades, hopefully they'll be able to sustain you as well. So once again, we are first and foremost simply an educational company providing you with sound fundamental education. So before we go into today's class, I am required by law to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results. And in fact, I have over 150 slides today. I think I may have gotten too many, but I really want to teach you. That shows how much attention we give to really trying to educate you. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So all examples are strictly for educational purposes only. So once again, we're required to show you this by law. As you're taking a brief moment to view our disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter if you haven't done so already. I post different things on a daily basis, anywhere from signals that our strategies have generated. In fact, I posted this morning a great signal about the strategy I'm going to be sharing with you today. But I also post different things, little bits of wisdom along the way, daily financial wisdom. So there's lots of great information. Feel free to follow us on Twitter. Now, as I stated at the very opening of this presentation, we are different from other webinars you may go to because our only goal, our only aim is to teach you. You know, I don't want to force feed you signals and tell you, well, come to my website on a nightly basis. I'll tell you what to buy or sell. I don't want you to ask me what the perfect time frame is or what the perfect system I should be trading, because you're in charge of your own trading. You should be able to make that decision. You see, so many traders fail because they give their power away. They rely on someone or something to tell them how to trade. And that's, to me, a recipe for disaster. That would be similar to a brain surgeon getting ready to operate on a patient and then asking the assistant, well, what do you think I should do? What do you think? How should I do this? Or a lawyer right in the middle of court saying, well, going up to his client and saying, how should I trial this? What do you think I should say? I mean, that would be silly, right? Well, but traders do the exact same thing on a daily basis. They're constantly asking others, what do you think of the market? What should I do here? And they're looking at TV or going to chat rooms to find out what to do. This is a recipe for disaster, and in my opinion, why the majority of traders fail is because you've taken yourself out of the game. And the reason why traders take themselves out of the game is because they don't know how to trade. They haven't been supplied the proper information to make their own decisions. So this is our goal at Specialist Trading, to provide you with that information, to provide you with things that have stood the test of time. So as you can see here, my goal is not to trade for you. My goal is to teach you how to trade with the specialist edge. It's the same edge that turned my trading around and has sustained me for 4 decades, and hopefully it will be able to do the same for you. Now, since this is an educational classroom, and since we are going to be taking questions, I do want to take each and every one of your questions, but if we stop for every slide the way so many other webinars do, we'll be here a long time because I have a lot of slides to share with you today. I was collecting slides right up until about a half an hour before we began. So kindly wait till the end of today's class. If we just go through every slide and you let me teach you how to apply these things I'm going to be sharing with you today, we'll get through this in about 40 minutes, and then we can reserve the last 5 or 10 minutes for questions, okay? So if you happen to have a question, please wait till the end. The only question I will answer is the most common, and that is this being recorded? Yes, we record all of our presentations, so if you're having technical issues or if you have to leave early, don't worry. My sister site, Pro Trader Strategies, will provide you with a link to this class, okay? All right, so let's begin. And we're going to be displaying everything today on our new platform. This is our PTS Primo charting platform. I developed this with Pro Trader Strategies, and this will really shorten your learning curve because everything that I've accumulated in 40 years is right there in front of you. I wish someone had this platform when I first started to trade some 4 decades ago, but it's designed to teach traders how to trade. So everything you see today has been copied and displayed from the PTS Primo charts. All right, so let's start. We're going to share with you 2 steps. Now, these steps are extremely important. What you can do is make up your own strategy based on these steps, and I'm going to show you how they make up one of our most consistent strategies in just a few minutes. But step number 1, if you want to be a consistent trader, regardless if the market is roller coastering or if it's just kind of going flat, buy signals can only be entered above the 50-period moving average, okay? So in other words, price must close above the 50-period moving average. I mean, it's ideal to see the majority of price bars above the 50, but even if you have the majority of price bars below, if you have a bar closing above the 50, just one bar, and it meets all the requirements of your strategy, well, that is a good sign. That is extremely important sign. That's why we call it step 1. Now, at the same time, you're only going to take sell signals that can be entered below the 50. So you will never be shorting. I don't care if some guy says, oh my goodness, this is a top, or oh, this is a bottom. You will only be shorting below, or selling to go short below the 50 period moving average. These two, this first step is actually, it's not that I'm still going to share with you another step, but this first step, either going long or short, will add to your inconsistency immensely. I've often said, if I were stranded on a desert isle and I could only trade with one tool that I've accumulated, it would be this, because this has helped me so much in my personal trading. Now remember, it does not matter if you trade daily bars, weekly bars, or tick charts. Always have a 50 period moving average applied, and you will only be going long above, you'll only be going short below. Let me show you what I mean here. Let's look at an older chart of the spiders before the sell-off started. Now the market was going straight up. This is a weekly chart. These are all weekly bars here. And this is the spiders, the ETF for the S&P 500. All right, so someone in hindsight would say, boy, I would have loved to have known to go long. And, sure, you know that we're in an uptrend here, but how would you have known back here? Well, the first thing you want to do is apply the 50 period moving average. And this entire time, where has price been closing? Below or above? Above. So do you see how you add to your consistency when you are in sync with the 50 period moving average? It's a simple, basic tool, and most people have this on their charting platform right now, regardless of what platform you have. You can start using this right away. Let's look at DKS. Here's an older chart of the stock. Obviously, we've had a gap down here. It looked like we were bottoming out. Maybe we're just kind of making a little double bottom here, and then we have another gap down to the downside. So someone would say, boy, I wish I would have known this was going to fall out of bed. I could have exited. Well, if you had applied the 50 period moving average, you never would have even been long this stock, because look how long it's been below the 50 period moving average. This simple tool has kept me out of so much trouble and kept me in sync with the overall trend so many times. And I'm sharing it with you today. Now, if you trade a 1 minute bar, add a 50 period moving average. If you trade a monthly bar, add a 50 period moving average. If you trade currency pairs, if you trade E-mini futures, it absolutely makes no difference. This will work on anything. In fact, let me give you a homework assignment right now, since this is a classroom. Go back and research your last 10 to 20 trades. I don't care whatever market you trade. If you trade commodities, if you're a day trader, if you're a swing trader, it makes no difference. I can almost guarantee you that the reason you had losses were because you were out of sync with the 50 period simple moving average, meaning that you were most likely buying below the 50 period and selling above. Now, don't get me wrong. Every once in a while, there will be some great tops that you could have taken above the 50 that you could have sold, and some great bottoms you could have bought below. But these are far and few in between, because we want things that are going to sustain us, that have a certain amount of consistency. And if you have one or two of those trades once or twice a year, that's great. But most of the time, you're giving it all back, just like if you were in front of a slot machine. So we don't want to be trading like that, where we have one or two trades that are okay, and then the rest of them are terrible. That's not trading. That's just gambling. All right, now we go to step 2. Now that we know what side of the market to be on, whether to be long or short, then we have to add a little structure, because the 50 period moving average is not telling us to buy at the market. It's just telling us whether we should be looking at the market from a buyer's point of view or a seller's point of view. And now that we know where price is in relation to that, now we have to add some structure, okay? We have to add a little structure that's going to get us on our way. And in this case, it is the top 25%. In other words, a buy signal, regardless of what strategy you trade. I don't care if it's based on the full moon or based on fundamentals. It doesn't matter. The minute you know that you want to buy that bar must close in the top 25% of its range, okay? Now, most people have trouble with this. They don't understand what that means. Let's look at this generic bar here. And I've, on purpose, deleted what market it is, what time frame, because it makes no difference. Okay, this could be a tick chart. It could be a yearly bar. It makes no difference. But when you are talking about range, you're talking about extreme high and extreme low. For some reason, I don't know when this started, people started thinking range was open to close. That's not what range is. The range is the high of the wick to the bottom of the wick. Okay, so you measure that, and if you close in the top 25%, or the top quarter, that's going to be your buy signal setup. In other words, you have to have other requirements. Let's say it's based off news, okay? Let's say some news event comes out and you say, boy, I've been watching this stock. It's above the 50-period moving average, the way Steve says, and it just closed at the end of the day on some good earnings, but it closed at the bottom of its range. Well, then you don't buy it. You wait till it closes in the top 25% of its range. You see how this works? That's the bar you decide to go in on. Now, conversely, all sell signals must close in the bottom 25% of their range. So once again, we have a generic bar chart. Makes no difference what time frame. You simply measure the top of the range up here, top of the wick, to the bottom. And if you close in that bottom 25% portion, that bottom quarter, that's going to be your sell signal bar, okay? So in other words, let's say your strategy is based off of tops and bottoms, okay? Let's say you're below the 50-period moving average, okay? So you're following the first step, that's good. And the market has a little rally, and you think it's overbought. You think it's way up too high, okay? And the bar closes that day. You want to go short. All the other requirements of your overbought, oversold strategy are in place. But guess what? The bar closes at the top of its range. Are you going to sell? No, you will only sell if it closes in the bottom 25% of its range. So you need this as a requirement in order to fulfill your setup of your signal. It doesn't matter what it's based off of. Now, these are two of the pieces of the puzzle. Do they make up an entire strategy? No. This is one of the things most students have trouble with. They see these two things and they go, great, so all I have to do is find a bar that closes in the top of its range, it's above the 50, and I just buy at the market, right? Well, it's not that simple. Those are just two pieces of the puzzle. You still need to have some other requirements like entry points, money management, exit points. There still needs to be a little bit more substance to that, but you're on the right track. I've just given you two great rules that actually make up one of our best strategies. For example, if we look at that weekly chart of the spiders, and we know that it's been above the 50 going back all the way back here, well, these were all buy signals. They all closed at the top of their range, and they met the requirements of one of our best strategies, okay? So you would have been able to buy the market all along here using those two setup rules. Now, conversely, remember DKS? Someone looking at this will say, boy, why did I buy this? I didn't know where to get out. Well, knowing the 50%, or I should say the 50-period simple moving average rule, well, now you know that you should have been short the entire time. And then using step number 2, we see here these bars all closed in the bottom 25%. But it's not just enough to have these two rules. You also need some more requirements, some more substance. And according to the strategy that these sell signals are based off of, they took those two and then fulfilled a couple of more to make these sell requirements. Now, I know you're asking, you said, well, that's great. I mean, what strategy is that? Well, that's strategy number 4. That's one of our most consistent strategies. This is one of the first strategies my mentors taught me some 4 decades ago on the floor. And I have been using it on a daily basis in some capacity in my trading, regardless of what I trade. If I decide to trade currency pairs, if I intraday trade the futures, if I trade stocks, I'm always using a few of the rules or the entire rules to strategy number 4. Let me share with you some of the highlights. It's for all traders, beginners to advanced. It makes no difference if you're a hedge fund trader or if you've been trading a couple of weeks. It makes absolutely no difference. Everyone is supplied with the same basic format, and then we work out from there to meet your needs. If you'd like to trade conservatively, great. If you want to trade aggressively, great. It was originally designed for traders looking to catch quick momentum moves. Myself, when I first started trading this on the floor some 40 years ago, I was in and out in a matter of minutes. Okay, but now we have devised ways to stay in the trade, if you like, longer, weeks, months, even years. Its intensity level from 1 to 3, if 1 is the most intense of all strategies where you can't even leave your computer to walk away to make a sandwich, and 3 is the most relaxed where you can just enter an order and come back at the end of the day. It's a very moderate number 2. It only uses one indicator. Why? Because it's a pattern recognition strategy. We were looking for a specific pattern. All right? And guess what? You know what the indicator is. I already gave it to you. It's the 50-period simple moving average. So you already have that one indicator that is used in this strategy. Now the pattern, I can't give that to you because that's reserved for the people who did purchase strategy number 4. But you have a piece of the puzzle in that pattern in that it must close in the top or bottom 25% of its range. The beauty of strategy 4 is that it can transfer onto any time frame, any direction, and any market. So if you like to trade multiple markets, if you trade, well, a lot of students will say, well, Steve, I trade stocks, but I also trade currency pairs. Great. You can use the same strategy on both. There's nothing you have to change. That's the beauty of this. Now, if you are a member of our Strategy 4 course, you're going to receive automatic buy and sell indications, but these are for educational purposes only. In other words, I teach you through our classes and through my mentoring how to spot valid strategy number 4 buy and sell setups. So what I instruct all my students to do is to learn the pattern, learn what to look for, but then use the automatic buy and sell indications as a way to check your work. So let's say you look at a chart and you say, see, I've studied this. Steve says to look for this. Hey, this is the pattern right here. This is a buy signal in Apple. All right. Then you would simply click on the buy or sell indication and see if a green or red arrow appears to see if you're learning the strategy correctly. Now, all of our methods are about consistency, meaning that we have a 2 steps forward, 1 step back approach. This does not mean that every trade will be a winner. In fact, I'm going to show you some losers in a few minutes. The beauty of this particular method is its ability to recoup its losses, its small losses, rather quickly sometimes. So that's what we're looking for. It's okay if you have a small loss every once in a while. In fact, today, my very first trade using this strategy, I was trading the E-minis this morning, was a loss. I had 2 more trades. The next trade, I made back the loss, and then the trade after that, I had a profit. So I've only traded 3 times this morning, and I have a profit. 1 was a loss, and 2 were winners. That's what we mean by consistency, okay? All right. Let's show you an example here in STT. Now, someone looking at this who doesn't know what I teach or who trades the way 99.9% of all traders trade by listening to someone or taking their cue from some outside source would look at this chart in STT coming in just a month ago and say, well, there's absolutely no information here. I checked the earnings, and the earnings aren't supposed to come out for a while, so nothing's really happening. The chat room I go to, they're not interested in this stock. In fact, they say that it's probably going to head lower because this company is out of favor. And the institutions aren't really involved in it. So there's no real clue here to tell me what the volume or this program I took, this course I took on what the institutions do. So I'm not going to touch this. In fact, if anything, I probably look to sell it because it's in a range, and most ranges kind of go head lower, right? To see how all my justifications are based off of what someone or something else is telling me how to trade this, okay? The institutions, a chat room, volume, whatever. Trust me, I was taught these things 40 years ago, and they didn't work then. There was no consistency then, so there's not going to be any consistency now. What is the first step I taught you? The first thing you want to do is apply the 50-period moving average, what we call our buy-sell line, okay? Now, someone looking would say, well, Steve, we're in a range. We're not going anywhere, so how do you know whether to buy or sell? Well, you would click on the buy-sell line on our platform. Now, you can do this on any platform, but our platform, everything is 1 click away. And you'll have a drop-down menu. We have different ways in which to view the 50-period moving average. I've given different webinars on each and every one of them. Today, we'll talk about the 50-period simple moving average. It's just the plain moving average, okay? And once we've applied it, well, guess what? Where is price? It's above. So automatically, we don't care what the institutions are doing. We don't care what the volume is. We don't care what the chat room says. We're only going to look at this stock in terms of being a buyer. Now, are we going to simply buy at the market? No, we need some structure. All right, we need, if we're in a boat, we need some wind, okay? So we need something to tell us it's going to go. So right off the bat, what do we see here? Well, step number 2, a bar closed in its top 25% of its range. Now, at this point, if you are a member of our course, all you'd have to do is click on strategy number 4 to check your work, because you would have seen if the pattern requirements were met. Click on strategy 4, the drop-down menu appears, and in 2 seconds you click on signal arrows, and guess what? You were right. You properly spotted a valid strategy number 4 buy setup. So where everyone else is saying, well, there's nothing going on in this stock, there's absolutely no movement, there's no volume, the earnings aren't going to come out for a while, the institutions don't care about it, it's really just floating in the water. Guess what? The stock gained 16 points in the next 3 weeks. All right. How did we know that? Because we don't listen to outside sources. We only listen to the market. And the market was telling us, it was not only telling us, it was screaming it wanted to go higher. So that's the only thing we listened to. Trust me, I used to trade that way 41 years ago, and I'd have a couple of good trades and I'd give everything back. It wasn't until my mentors taught me these same things where I started to become a consistent trader. So this is what all we're trying to do is supply you with information, not telling you what market to trade, not telling you what time frame to trade, but we supply you with information. We give you different variables for entry, different variables for stop, and different variables for exit. So let's say one of my students says, okay, Steve, I've learned how to spot the pattern. I've studied the different entries. I've chosen one of the more conservative ones. I enter the next day on the opening, and I'm a quick kind of trader. I don't like to hang around a lot. All right, so we teach you a particular exit where you probably could have exited in the next 2 or 3 days right here for a quick point or so, all right? But what if someone says, well, Steve, no, I'd like to stay in and for as much bang as my buck, I want to try and squeeze as much profit as possible. Well, we would teach you different techniques where you could have probably exited somewhere around here, or if you used another technique, you would have still been in the trade. And then lastly, someone says, well, Steve, I'm very conservative. I like to have a tight stop. We have upwards of 4 to 6 different stop placements. So do you see, this is not a system. This is not going to be the same way to enter every time. It's not going to be the same way to exit every time. And it's not going to be the same way to place your stop every time. And the reason is because that's the way we designed it, because we want you to make the decision. Remember, like the brain surgeon who comes into the operating room and says, well, what do I do now? Why don't you tell me? No, you're going to tell yourself what to do. You're going to decide where you exit. You're going to decide how you enter, and you're going to decide where your stop placement is. This is the way I was trained, and it was tough for me at first because I wanted my mentors to say, well, just tell me where I get out. Just tell me what's the level. Tell me where I enter. Tell me where I stop. I said, no, you've got to decide, because you have to trade your persona. You have to trade your risk tolerance. Everyone's different. And I finally understood that. And once I did and started trading my own risk parameters and my own style, that's when I started to become consistent. So this is why we do not teach nor do we trade systems, because they require everyone to do the same thing like robots on each and every trade. You have to enter at the same place. You have to exit at the same place. You have to place your stop. And regardless of what the conditions are of the market, regardless of what the market's doing, you have to enter the trade the same way. And that's how you get statistics. That's how you get win-loss ratios. That's how you get percentage gains. We don't have any statistics because everyone is encouraged to trade differently. All right, so I know many of you at the end of this presentation will say, well, what's the win-loss ratio on this? Well, it depends on how you trade it. And we're not a statistical company. We don't have enough manpower to go around and ask all of our thousands of students how they traded it and then make statistics for it. It's just ridiculous. Everyone should trade differently. And if everyone is encouraged to trade differently, there's no way there's going to be any statistics. Everyone's going to have different statistics. One trader may have made 10% one year. Another trader may have made 25. Another one may have made 100. It all depends on how you come to the table, how you trade. All right, so let's show you some more examples. I'll run through them. We have lots of examples from December through February. We're going to mainly focus on stocks because of the stock market, but I'll show you other markets towards the end of today's presentation. Now, the beginning of December and January, the market was going straight up. So since we were above the 50, mainly generating buy signals. So let's start off with buys with strategy number 4. All right, BBY. We're above the 50-period moving average. A buy signal is generated. It meets the pattern requirements. Stock gains 10 points in 2 weeks, okay? See how simple this is? We don't look at any earnings. We don't look at what's going on worldly or what's going on economically. It's all in the pattern. How about MAR, okay? Where is price in relation to the 50? It's above. So are we going to be sellers? Absolutely not. At the beginning of January, the pattern was met. We also closed in the top 25%. The stock goes up 13 points. Now, it pretty much went up straight 13 points. Now, if you wanted to have gotten in earlier, well, guess what? 2 signals were generated in December, beginning of December and mid-December, so you could have actually captured upwards of 22 points. Now, how many points you took out is up to you. It's like someone driving up to a huge lake and wanting to get some fresh water, some drinking water. You can either pull up and just take out a little can of water and then go back in your car and go home with that, or you can pull up and get, gallons and gallons full of water and take it home. It's up to you how much you want. There's enough for everyone to go around, but you're in charge of making that decision, not us. We just supply you with the different ways in which to apply your own decision-making process. How about triple L? Well, a buy signal generated in beginning of December, then 2 more generated beginning of January. Not much has happened until it kicked in and the stock went up 24 points. You had 24 potential points to work with. How about CSRA? Well, this actually happened just last week. This was on the 7th of February. Where is price in relation to the 50? Well, here's the concept we talked about before. The bar before is below the 50. But as long as your buy signal, where all the rules come into place, where all the requirements are met, closes above the 50, that's valid. So it wouldn't matter if every bar was below the 50, as long as the buy setup is above and closing above, that is a valid buy setup. So this happened just a few days ago, and look what happened. The stock gained 10 points in 3 days. Obviously, it gapped up for some reason, some fundamental news. Did we know this? Was anyone informing us and calling us up? Did the CEO call me up and tell me to place a buy signal? No. The market told me it was going up. That's the only thing you have to listen to. How about GWW? Okay, same thing. We're above the 50-period moving average. This was at the end last week in January. Okay, we closed in the top 25%, and then all of the requirements are met for the specific pattern. Stock's up 70 points in 3 days. Now, we realize this is an expensive $200 stock, but who's to say you can't purchase options? Now, remember, you're in charge of how you want to trade it. You do not have to buy the stock. If you like to purchase calls, that's fine. If you want to have some type of spread that has an upward bias, that's fine. Either way, you would have had 70 points to work with the next 3 days. All right, so let's look at sells now, because the market kind of shifted coming into February, and this is how we would be able to ride the roller coaster. As the market's going up, as the roller coaster is going up, we're going up with it. As it starts to go down, we're embracing it and going down with it. We're not in any way going to fight the direction of the market or the direction of what we're trading. So as we look here, we're looking at letter D. Coming into December and January, we were above the 50 period, but at this point, we had our first close below. This was at the end of December, all right, or mid-December. And then we had 2 more sells. These are all strategy number 4 sells. As you can see, we are below the 50. Each one of these bars closed below the 50, and they each close in the bottom 25% of their range. Now remember, there are still some more rules that have to be met, but I just can't divulge them right now. It wouldn't be fair to the people that purchased the course. But the stock quickly fell 7 points coming in to this last week. Here's another example, XLNX. As we can see, all of the signals are above. In fact, there was a little signal here to go long, and it wasn't that great. So this is where we say sometimes they are good signals, sometimes they're not. But this one wasn't that good. And had you taken it and gotten out very quickly, you might have had a profit or broken even. But let's say you didn't, and you reversed and went short because we have a sell signal closing below. Well, you could have reversed and made 9 points in 4 days. So maybe you lost a couple of points off that first trade, but you made it all back plus some more on the next one. This is what we mean by consistency. Once again, we have a cluster in AIZ of sell signals. We are mostly above the 50-period moving average, where we have a close below. We have another close and another close. Okay? So the stock falls 14 points coming into this past week. Now, where most people were saying, boy, this market really took me by surprise. I had no idea it was going to fall out of bed. Well, this is in January when these sell signals were being generated. This is the first week of January. Okay? So there's no reason to be a victim. Traders love to be victims. They love to say, boy, I was doing great until the market turned around. Well, you're in charge of your own trading. There's nothing that's, no one's doing anything to you. No one's trying to screw you over or take your money away. If you lose money, it's because you are out of sync with the market. It's not because anyone did anything to you. It's because you are trading out of sync. You are buying below the 50 period or staying long when price is below the 50 period, or you are selling when price is above the 50 period, or staying short while price is above the 50 period. So remember, no one does anything to you in the market. No one takes your money away. No one beats you, or no one wins over you. It's not a win-loss type of mindset. I know you can think that for every win there's a loss, but that's the same mindset as saying, well, for every breath I take, someone exhales, and for every exhale I take, someone takes my breath away. That is true, but it's a silly way to think. There is enough for everyone to go around. The only thing you're in charge or you should be concerned about is yourself. You're only responsible for your own trading, and you're responsible for being in sync with the market. If the market is a river, You do not want to swim upstream. That's how you lose money. If the market is a river, you want to swim with the current at your back. So how do you know what the current is? By applying the 50-period moving average. So we closed below the 50 on all three of these sell setups, and the market abided because it was telling you it wanted to go lower. And if you missed that, guess what? 3 more signals generated coming into February. How about MCD? Here's another perfect example. The market was telling you it wants to go higher. Why? Because it's above the 50. Until right here, it closed in the bottom 25%, and it closed just barely, but enough to be below the 50. So at this point right here, at the end of January, it said, I'm going lower. And it met all the rules and requirements of strategy number 4, sell signal, and 18 points to the downside. You see, once you learn how to listen to the market, you'll never get to play the victim card again. Traders love to be the victim because what it really means is that you can always blame someone for your losses. But once you are in charge of your own decision-making process, you can't blame anyone. And plus, you're the one who will take credit when things go great. Now we see EXPE, same thing here. We're above the 50. We close, every close is above the 50 until this very first one on February 8th. And then look what happens. 25 points. Did we know we were going to gap down? Absolutely not. Did we know it was going to go down 25 points? Absolutely not. We just knew that the stock was telling us it wanted to go lower. Now, 25 points, great, we'll take it. But we had no idea. We never try to predict how high or how low the market will go. We only try to be in sync with it and then decide to get out when we want to. Lastly, let's look at PSA right here. Same thing. We are, for all intents and purposes, majority of price bars are below. We're getting a cluster of sell signals. And then right here in the beginning of January, we started to fall out of bed. Coming into this past week, 27 points to the downside. And if you missed that, a couple more sells here, okay? Now let's look at some other markets real quickly. Here's a 1-hour chart of the E-mini. This was, I believe, on the 8th or 9th of February, this past week. As you can see, how would you have lost money knowing that you're below the 50, a sell signal is generated, and you could have taken potentially upwards of 115 points in your favor? That's roughly over $5,500 per contract. To see how being in sync with the 50-period moving average can really help you with your trading. Now that's an intraday trade of the E-mini on an hourly basis. Let's look at a 4-hour chart of the euro dollar, okay? Same concept applies. We're above the 50, so we're only going to be a buyer. Each one of these bars closed in the top 25% of the range. They were all buy signals. Had you taken the first one, well, 275 pips in your favor that you could have worked with. Okay? It's close to $3,000 per contract. And then lastly, the Bitcoin. We all know that the Bitcoin fell out of bed. Well, look what happened here in January. Here's a daily bar. Look how long we've been below the 50-period moving average. So why would you be holding on or thinking, well, it's going to go back up if it's below the 50? This is a brand new market, okay, relatively new. It still adheres to the same rules of things that I was using 41 years ago. If price is below the 50, you should not be a buyer. And look at the sell signal that was generated at the end of January. It was 5,000 basis points to the downside. Now, a lot of people say, well, Steve, can we use this on ETFs? Sure. Look at this. This is a QQQs. This is the beginning of January. We're above the 50-period moving average. A buy signal was generated to go long the ETF that represents the NASDAQ 100. So even if you don't trade the QQQs, you could have used this as a market directional tool telling you that that index is going to go higher. Because if the ETF that represents the index has a buy signal, well, most likely the stocks that make up that index will go higher as well. So strategy 4 can also be applied as a market directional tool. So this signal at the beginning of January worked out great. And then we see what happened here coming into this past week. And look what happened. A buy signal was generated, I believe, the 6th of February. And what happened here? Well, it didn't work out. Okay? That would have been a big loss. So just to share with you, sometimes signals do not work out. For example, you may have small losses from time to time. Here's a sell signal. We don't have the 50-period moving average on the screen, but this is a valid sell signal. Let's say you had taken this, an ESRX. It goes down one day, but you don't get out, and then guess what? It goes completely against you. Or maybe it's a little worse. Look at Netflix here. We're above the 50-period moving average, even though you don't see it, and a buy signal was generated here, and you would have gotten stopped out. Another one here, stopped out. Another one here, stopped out. Now you say, okay, well, I'm going to get a sell signal here, so I'm going to take this. Most likely we're in a downtrend. You take this one, and guess what? You're getting stopped out, and for all, to make things worse, to add insult to injury, now it reverses and turns into a buy signal. So you've just had 4 losing trades in a row. And you said, listen, I've taken 4 losing trades. I'm not going to take 5. So you stay out of the last one. You say, forget it. I've already lost too much money. And that's the one that goes straight up. Okay? So we have to ask ourselves, how can we increase our odds for success? Because every once in a while when the market is going back and forth like that, you will get some whipsaws. You will get some losses. Well, there's a simple way with another tool that I was taught some 40 years ago. That's the PET D. You've heard me give standard presentations just talking about the PET D before. But for those of you who aren't familiar with what the PET D is, it's a proprietary algorithm. We don't give the rules away because it's that powerful. And it is a little bit cumbersome. It's a formula that you have to calculate by hand, but we took all that work out of it for you. It's a proprietary algorithm, and we've changed it to a color bar tool. So there's nothing you need to do. The colors of the bar are automatically changed from green to red. And so what this does is it tells you the short-term trend. It identifies by the color what the trend is. Let me show you how simple this is. If you see a series of green bars, well, the short-term trend is up. If you see a series of red bars, the short-term trend is down. To see on a real chart here, we look at Aetna. This is the way most people will view an uptrend. They'll say, well, gosh, this is an uptrend, so I guess I should get in somewhere around here now that I'm convinced. And then once you get in, it goes straight down, right? What if we knew back here that we were in an uptrend? And what if we knew well in advance, say like right here, that we were going to be in a downtrend? Well, it's simple. You would apply the PET D, and it changes the colors. So we would have known right here with these consecutive green bars that we're going higher. And once we had a couple of consecutive red bars, it would have told us the trend has changed and we're going lower. So you have to say, well, yeah, okay, but how is that going to help us with strategy 4? Well, first of all, let me give you some more examples here. Here's a weekly chart of IWM, the ETF for the Russell 2000. Once we add the PET D, don't you think this could help you with finding out what the trend is going to be? Or what about an intraday 10-minute chart of the E-mini futures? Once the market opened, look at how the E-mini went straight up until it started to roll over. Okay, you could have decided at any point, even on this sell-off here, to go long, because while it's selling off, the bars are remaining green, telling you that we're still in an uptrend even though we're selling off. So wouldn't you want to buy on that sell-off? Or what about here on a monthly chart of the British pound? These are all monthly bars. It was going fine until we had a couple of consecutive red bars. And look at this. For years, since 2015 all the way down to 2017-18, it's been negative. And the PET D warned you about that years in advance. All right, so once again, this is a great tool for determining the trend, but how will it help us with strategy 4? Well, one of the best ways to apply the PET D is as a signal confirmation tool. So what do we mean exactly by that? Well, here's how it works. When we combine strategy number 4 with the PET D, we get one of our most powerful products to date. That's Specialist Trading Dynamic Duo. We call it our Dynamic Duo because it is just that. It's combining these two things together that make this powerful synergy of a consistent setup. Here's how it works. If strategy number 4 generates a buy signal, the PET D must color it green, that bar green. We don't care if every bar before it is red, but that bar must be green. That's it. And conversely, if strategy 4 generates a sell signal, the PET D must color that sell bar red. And that's it. That's all you need to add tremendously to your consistency. Remember those losing trades we talked about? Here was that one where we wanted to go short and then it went right back up. What if we had applied the PET D? Well, with our platform, it automatically would change the color, and you would see that in order to sell, this needs to be red. But what is the color of this bar? It's green. So you would not have taken this trade, and you would not have lost any money. How about Netflix, okay? We have a buy here, a buy here, a buy here, a sell, a buy. Boy, we got too many losses. I would have had 4 losses in a row, and then I would have been too frightened to take the 5th trade. Well, we're not saying that it works 100% of the time, but if we applied the PET D, guess what? This buy signal was red. See the red outline on the up day? Here's an up day, but look at the buy outline is red. This third one is red. So you would not have taken any of these buy signals. You would have saved yourself all that money. You would have taken this sell signal because it is red, and it would have resulted in a minor loss. That's okay. You would have stopped and reversed and said, well, I lost on that one. That's okay. Stay with it because we know there's consistency. 2 steps forward, 1 step back. And if you've taken the very next signal, it's green. So that's what you're looking for. You want the buy signal to be green. Once you took it, off to the races. You made back all the money you lost here and some more. This is what we mean by consistency, adding to your consistency. All right, so let's look at some more dynamic duo examples, and then we'll go to questions and answers. All right, Twitter here. Twitter generated a buy signal on the 26th, I believe, of January. Okay, now how could we have given ourselves some confidence to take that trade? Well, with our platform, you click on Pet D, automatically changes the color, and you can see that that buy signal is colored green. So now you have the confidence to take it, and the stock goes up 10 points in the next couple of weeks, okay? Remember, we don't care what the prior bars were. All that matters is that the buy setup bar is colored or outlined green. How about this sell signal in McDonald's, okay? This is one we shared with you earlier. Someone could say, but gosh, Steve, all the bars have been above the 50. This is the first bar. What if it's going to bounce back up? Well, let's apply the Pet D, click it on. The bars automatically change. It's a red bar. That's sharing with you that even though it's not 100% guaranteed, you have increased your odds for this being a consistent winning trade tremendously because the Pet D is confirming it. And the stock dropped 18 points in the next week or so. How about STT? That was the first stock we shared with you. Remember, people were saying, well, this is just going sideways, Steve. I know we're above the 50, but come on. Well, we add the Pet D, click on Pet D, and we see that nearly every bar has been green, but all that matters is that the buy setup bar is green, and we remember that going up 16 points. Do you see how this adds to your consistency? So you have the consistency of the strategy coupled with the consistency of the Pet D confirming the strategy. How about the QQQs, all right? One was a great winner, but the other one was a great loss, all right? How could the Pet D have helped us? Once again, you click on the Pet D in our upper green strategy tab where all of our strategies and techniques are placed. And we see here that the reason why this was a winner is because the buy was colored green. And look at this buy signal that happened last week. It closed in the top 25%. All right. It closed above the 50. But what color is the outline? It's red. So that's telling you do not take this trade. As you can see here, sometimes the best trades are the ones you don't take. So you would have had the advantage of the first one going up. The second one, you would never have taken, and that's okay. You wouldn't have lost any money. All right, so let's recap. We shared with you strategy 4. In fact, I gave you 2 of the basic rules to the strategy. That's the 50-period moving average, and that's also looking for a bar that closes either in the top or bottom 25%. These make up 2 of the 5 rules of that particular method, okay? You already have them. You can base your own strategy based on them or start experimenting with them and see how they can help your own trading. We also share with you the Pet D, how powerful it is and how it can really add to your consistency. It's a proprietary color bar algorithm. I've been using this on a daily basis. I've used it every day, today included, for the last 41 years. It's that powerful. And then when we combine the 2, we share with you Specialist Trading's Dynamic Duo. You have a synergy for success because you've increased your odds for consistency. So, ask yourself, do you think these edges could have helped your trading? We're already into the 2nd month of this year. It's going to end pretty soon, and we'll be pretty soon into the springtime. Are you anywhere near where you thought you'd be? Are your trading goals and resolutions bearing fruit, or are you even worse off than you were the year before? I saw a statistic this last week that said most trading resolutions or most goals are ditched or have already failed by the 2nd or 3rd week in February. Well, we're right there right now. So ask yourself, are you trading anywhere near where you thought you'd be at the beginning of the year? Well, we have a great way to get you back on track. We have a special for all the attendees today, and it's got great discount. We're going to be discounting it close to 45% today. This is our Dynamic Duo special. We're going to be offering you strategy number 4 along with the Pet D tool. This is instant course access, all the online instruction, 20 videos. We're going to share with you all the different points of entry, all the different points of exit, and all the different points of stop so that you can make your own decision how you want to trade. It's also going to come with a signal alert, so you'll know what up and green arrows are to check your work. We're also going to include 4 pet D trading techniques. These are techniques just based off of the pet D alone without a strategy. Remember, this includes both add-ons, the add-ons for the up and down arrows for the strategy and the add-ons for coloring the pet D bars, okay? Now, we're also going to include the PTS Primo charts. This is the trading educational portal that teaches you how to listen to the market. What we're going to do is offer you 12 months. Now, 12 months, don't get scared here, 12 months of the PTS Primo charts would cost over $1,900. Well, guess what? We're not going to charge you $1,900. In fact, we're not going to charge you anything. We're going to include 12 months free. So with the Dynamic Duo special discount, you're also getting 12 months free of our PTS Primo charting platform. What comes with that? Well, a great scanner. So if you're not in front of your chart on a daily basis, when you come home from work, you can simply scan to see what the strategy 4 setups are and where the pet D is going to be for the next day. Let me give you an example here. Let's say you're looking at a stock. All you have to do is click on the strategy number 4 tab and then click on scan. A scanning page will automatically appear. We provide you with a list of symbols, different baskets of stocks from top ETFs, NASDAQ 100, S&P, currency pairs, Bitcoin. You can choose whatever basket or make up one that you like to look at on a daily basis, and they'll automatically appear in about 10 seconds. All right. Once the symbols appear, you just simply click on scan, and on the far right, you'll see a series of either green or red horizontal bars. The green bars mean that that's a buy signal in the corresponding stock. The red bars mean that that's a sell signal. You'll get all this information in less than 30 seconds every night, okay? And you can scan for multiple markets. You can scan for the pet D. It's fantastic. It's jam-packed with information that'll really shorten your learning curve. For example, here in WTW, if you would have scanned, you would have seen the night before on the 30th, a buy signal was generated. We're above the 50 period. We closed in the top 25%, and it met all the other rules of strategy number 4. So you clicked on strategy 4, and you saw the up green arrow. So you figure, okay, well, maybe I'll buy some options, or maybe I'll buy the stock. But then you say to yourself, well, I don't know. I'm not sure if this is going to go higher. After all, it's had a really high run up here. How do I know I should take this? Well, with the discount we're going to be giving you today, you'll also have the pet D to add to your confidence. All you do is click on the pet D and the colors change. And you'll see that that setup bar is being validated by the pet D. It has a green outline. So this will give you the confidence to take the trade. And guess what? In a little more than a week, the stock jumped up 11 points. Okay, this was just last week, coming into this last week. Still not convinced? Well, what about the last couple of days? Look at this sell signal or buy signal. This was on the scanner as well in TWLO, all right? The majority of the bars are below the 50-period moving average, but a sell signal was not generated until here where a buy signal was generated. Why? Because the bar closed in the top 25%. It closed above the 50, and it met all the rules of the other requirements that we're looking for. Now, if you're not convinced, you say, well, Steve, just one day above, that doesn't convince me that we're really going to go up. Well, all you have to do is, for more confidence, click on Pet D, and you can see that that bar was colored green. So that gives you the confidence to take the trade. Remember, this was on the 12th, which I believe was Monday. Stock rose 6 points 2 days after that, okay? So these are things that we're not cherry picking that happened 6 months or a year ago. This happened a couple of days ago, all right, or a couple of weeks ago as well. This can all be yours. Strategy number 4, along with the Pet D, along with 12 months of the PTS Primo charting platform, okay? Now, normally, if you just buy them separately, strategy number 4 would cost you close to $700. If you wanted to purchase the Pet D as well, it would cost you close to $3,000. And if you wanted to get the PTS Primo charts, remember we said for a year it'd be about $1,900. This would all come out to over $5,500, over $5,600 with the 1 year of the PTS Primo charts. But don't worry, we're not going to charge you anywhere near that. We're going to slash the price by about 40% down to $29.95, which includes the 1 free year, and we're also going to include payment plans. So if you can't come up with a lump sum of $29.95, you can still put a small deposit down and you can be up and running as soon as today. So we really want to get your trading on track. We've discounted and slashed things like crazy. We're offering you the PTS Primo charting platform for free for a whole year. You see how easy it makes trading. this is how you take advantage of this great offer, okay? Contact my sister site, Pro Trader Strategies. You can email them at trading@protraderstrategies.com. I would personally suggest the best thing to do is to call them directly at area code 310-598-6677. They have trading consultants manning the phones right now, and they will answer any question that you may have, okay? Anything concerning price or discounts or structuring some type of payment plan. Now that link below at the bottom is more information on that sign up page, and also if you just want to sign up altogether for that $29.95 price, that discounted price where you're locked in. Now, it's not a live link, but if you look in the chat box, they posted the live link on the chat box, okay? Excuse me. Now, I'm going to leave all this information up here. We have about 5 or 10 minutes left to answer any questions. I want to thank you for holding off on asking them, and I'll open up that box right now. Question says, is strategy number 4 a course or a software? Well, Ken, it's actually both. It's a course where I teach you all the rules. In other words, it's an online course where nothing is systematized. Remember, like a system is a software that just blindly spits out buy and sell signals. We don't believe in that. Remember, at the beginning of the presentation, I said the reason why most traders fail is because you rely on someone or something else to tell you what to do. What I do is teach you the things that have stood the test of time, show you lots of different variables for your entry, for your exit, for your stop placement, so that you can decide how you want to trade it. But then there's a software sharing with you the most basic point of where a setup has been generated. And then you can decide from there how you want to trade it, okay? So we provide you with both sound fundamental education from yours truly and the software that is your guide, okay, that you can use on the platform to tell you when a signal has been generated to check your work, okay? Let's see, what accounts for the conflicting signals, or for example, red bars on buys, signal arrows? Donald, is that, or you're talking about the PET D, Donald, I assume? What happens is that the strategy 4 is based off of it's a pattern recognition strategy. If you were here at the beginning, I explained that strategy 4 is based off a specific pattern. It's looking at a number of bars in relationship to each other, as well as where some of the closes are and where the openings are. And it's also looking at its relationship to the 50-period moving average, whether it's above or below. And that's how it constructs or comes up with its requirements to generate a signal. Whereas PET-D isn't concerned with that at all. PET-D is a proprietary tool based on, the only tool I can share with you is based off momentum, because I can't really share with you what the formula is. And so this momentum is very finely tuned on a tick-by-tick basis. So if you get a setup which is based off a pattern, you want to make sure that that pattern is in sync with the short-term momentum. If it's in sync, that's a dynamic duo setup. If it's out of sync, well, the odds are you won't have a successful trade. Momentum is not in sync with the pattern. I hope that makes sense, but that's about it in its most simplest form. Mohammed is saying, what is the difference between the PET-D and the Primo charts? The Primo charts is a platform. In other words, everything I've shown you is the Primo charts. All the stocks, the futures, the currency pairs, you simply click on whatever you want to see and it's all there in front of you. The PET-D is a tool. It's a directional tool, okay? In other words, think of any platform. Think of, let's say, MT4. MT4 is a platform. You can see your charts on that platform. You can look at a bunch of different strategies, and you can look at a bunch of different markets, different time frames. That's what the platform does. It shares with you all what's going on in the market. Now, on MT4, they have indicators. Maybe you want to look at stochastics. Well, that's an indicator. That's a tool. That's what the PET-D is. The PET-D is a tool that we have on the platform, okay? I hope that makes sense. Excuse me here. I'm sorry, I'm losing my voice, but having spoken, I told you I had a lot of slides. The main thing I just want to stress is that I have been using these in some capacity for the last 40 years of my own personal trading. They've given me tremendous success, but I'm not going to sit here and guarantee you that you're going to be a successful trader just because you have the dynamic duo. You have to put in the work and you have to decide how you want to trade it. So many traders will come to me as a student of mine and say, okay, Steve, I purchased strategy 4, I purchased the PET-D or the dynamic duo, and they say, okay, now tell me what do I do? I say, well, wait a minute, I'll tell you what they do, what these things do, and how to trade them. but you have to decide. I mean, we're trained to go to a chat room or a trading room or a signal service to tell us what to buy or sell on a daily basis. Well, we're different from that. We don't believe in that. And if those things work so well, then why has it been estimated that 80% of all traders fail? It's because the whole industry is based on false consistency. Things don't work like that. You have to make your own trading decisions. That's the great truth in trading. No two traders should ever trade alike. So we encourage you to make your own trading decisions. What we do, though, is provide you with all the different variables, all the different entries, all the different stop placements, all the different exits, show you what you would like, telling us after you've told us what type of trader you are. Are you conservative? Are you aggressive? Are you short term? Are you long term? Are you intraday? Are you swing trader? And then you can decide what you would like to apply. All right. This is how you become a consistent trader. Trust me. If the other way is how you become a consistent trader by just mimicking what some guy does in a chat room or a trading room, then why do most traders fail? Because that doesn't work. You have to be in charge of your own trading the same way an airline pilot can't let one of the passengers decide how to land the plane. He has to be in charge of flying that plane. It's the same way with you, okay? Trust me, this is a great, great offer. It would cost you close to $6,000 if you purchased everything separately. We're slashing it down to almost half that price, and we're also including a payment plan. So even if you can't come up with $29.95, not to worry. With a small deposit, you can still be up and running and devise some type of monthly payment plan with Pro Trader Strategies, and they would be happy to accommodate you. This is a great offer. Remember, look back at your trading so far. We're almost at the end of the second month of 2018. Are you anywhere near where you thought you would be? Most likely you're not. Most traders aren't, so don't feel bad. Most traders never reach that point. By the first quarter, they realize they'll never reach their goals. So how would you like to take a step forward instead of a step backward? Okay? Take advantage of this great offer. Or if you have questions, contact Pro Trader Strategies. They would be happy to answer any question about the platform, about the strategy, or about pricing and discounts. Okay? In conclusion, I hope you got something out of today's educational presentation. I really look forward to all becoming members of our dynamic duo course along with the PTS Primo charting platform. But mostly, I really look forward to all of you becoming students of mine at Specialist Trading. Thank you so much, and I'll see you next time. Bye-bye.